YouTubers, Mike Martin's here. Mike Martin's channel. Michael Burry of The Big Short says he has found the next market bubble. And this is the guy who called the whole subprime disaster and actually profited off it, if you guys remember, back in 07, 08. And let's see what he has to say. It has a lot to do with these market funds, I think, to be really honest with you. And these ETFs and crap like that. Passive investments are inflating stock and bond prices in a similar way that collateralized debt and obligations did for subprime mortgages more than 10 years ago, Burry told Bloomberg News. That's spot on right there. I'll say it again. Passive investments and inflating stock and bond prices in a similar way that collateralized debt obligations did for the subprime mortgages. So remember when that whole housing fiasco in 07, 08, and then the average house in Miami went from 200,000 to 600,000? Well, yeah, that's what he's trying to say. It's the bond and the markets, stock markets, and all the different markets out there are being propped up asset-wise, or depending on overflows or stimulus or whatever you want to call it, or stock buybacks or whatever you want to call it. It is being propped just like the housing market was. Like most bubbles, the longer it goes on, the worse the crash will be, said Burry. The theater keeps getting more crowded, but the exit door is the same as it always was. It all gets worse as you get into even less liquidity and equity and the bond markets globally, he said. There he is right there. Michael Burry, one of the first investors to call profit on the subprime mortgage crisis, yay, is seeing a similar bubble in passive investing, according to Bloomberg News. Passive investments such as index funds and exchange-traded funds are inflating stock and bond prices. Yes, for sure they are. In a similar way that collateralized debt obligations did for subprime mortgages 10 years ago. Yes, we know. And for people that watch this channel, we know this. And this is a big deal. And it's very good that actually CNBC is actually, saying this, which is shocking. Burry told Bloomberg News in an email, when a massive inflows into passive vehicles reverse, it will be ugly, he said. Like most bubbles, the longer it goes on, the worse the crash will be. Kind of like our housing market right now. Wow. It's been fueled, propped, government propped, backed, rebacks, first-time buyer, anything to get a first-time buyer into the market. Burry said, this is much like the bubble in synthetic asset-backed CDOs before the great financial crisis, in that price setting in the market was not done by fundamental security level analysis. That's right. No one's doing things by the book anymore, but by massive capital flows. Yep, I mentioned that earlier. Capital flows based on Noble approved model of risks that proved to be untrue. Of course. Burry manages about $340 million in Scion asset management. He shot to fame by betting against the mortgage securities before 2008 crisis. Burry was depicted in Michael Lewis's book, The Big Short, and subsequent Oscar-winning movie for the same. Low-cost passive vehicles have gained popularity on Main Street. Passive investments have now taken over nearly half the stock market as more investors shun stock prices and flock to index funds. According to the Bank of America Merrill Lynch, equity passive funds alone have ballooned to more than $3 trillion market in less than 10 years, according to Morningstar. These funds mirror just about anything that can be tracked. They include indexes such as the S&P and the Russell 2000. That's why people need to always understand the gaps between these, and understand the gaps between this, and the gap between the NASDAQ and all that. People need to keep an eye on the differentiations between these two. 100%. Trillions of dollars in assets globally are indexed to these stocks, Burry said. The theater keeps getting crowded, but the exit door is the same as it always was. All this gets worse as you get into even less liquid equity and bond markets globally. More notable investors have sounded the alarm on the proliferation of passive investing. Double Line Capital CEO Jeffrey Gondlich previously said it is causing widespread problem in global stock markets. He called it a herding behavior and said it has reached mania status. So there it is, guys. So This is interesting. This is how mutual funds works. Look at that. Short-term risk, order, buy, and limit the short-term risk. Oh, it's playing this. It's only a 2-minute video, but I don't want to play it because I'm going to get shot down here. But the thing is with this, you guys got to remember, even Andrew put this up, and he mentioned, he says he didn't make the link between the excess liquidity and short volatility, and Andrew brought that up, and it's like, oh, okay, yeah, I see that. And then Andrew went on to saying that, which is why the gap between the Russell 2000 and the Dow and the S&P 500 is very important, because you're looking at excess of liquidity and short volatility. So that is very, very key fundamental that was left out of the article, but we got it filled in by Andrew. So hopefully you guys understand what's going on here. I'm just trying to, because everyone follows me for the housing market. This is like the housing market situation. We blew up these artificially inflated assets, and it's happening the same with all this capital flows and all this garbage that's going on, and buybacks and stock buybacks and naked trading. I call it naked trading. And not executing orders, but executing orders and then withdrawing the orders to manipulate the gold and silver markets, which a lot of people from a lot of the big lending institutions and investing institutions have gone under oath and have been honest. You know what I'm saying? I don't know if you guys remember a few years back, I think it was 5 or 6 years back, when a lot of bankers were jumping off roofs. I'm not sure if you guys remember that. A couple of years back, AMTV was covering it like a hawk. But anyways, let me know what you guys think. Michael Burry, is he right? Has he found the next market bubble? That's the question. Comment below, let me know. Thanks for watching, guys.